Look at the trade tensions going back and forth throughout 2018. It has been a wild ride and it's only just begun. In China, the stock market has suffered, just as the other markets have suffered. There are two sides to this battle, and it seems that neither side is giving up. Who will be victorious? You came here for the truth, so let me unveil that for you. Today we're going to look at China's stock market, we're going to look at China's currency, we're going to see what they've been up to. There are tensions, of course, going on. I've been covering them here. It is so important to have our focus on China regularly because this country is a huge exporter, it's a huge importer. We need to know what they're buying, what they're selling, and we need to track that in order to be able to predict what's going to happen. All right, so I'm going to get into this right away. Lots to cover today, beginning with this article out of Bloomberg. Chinese stocks took another battering on Monday in the worst start to a second half of a year since 2015, as selling resumed amid worries over a falling currency, housing curbs, and the impact of U.S. trade tariffs. Now, I believe that this has changed. The market had come up slightly after that, but still we are down so significantly from the peak experienced in January. I'll show you that. I'm going to show you the currency charts. I'm going to show you the charts of the stock market as well. The Shanghai Composite Index sank 2.5%, more than wiping out a 2.2% on the rally on Friday, extending last month's 8% route. The yuan retreated, and it basically goes on talking about the depreciation. Shanghai stocks have tumbled into a bear market. Wasn't my words, it's theirs. Amid concern the economy will struggle to withstand rising tensions with the U.S. China's Purchasing Manager Index readings for June, released on Saturday, showed a gauge of exports orders shrinking. All right. We need to understand that what China has needs to go out to the world, and what the world has needs to come into China at an ever-increasing rate. Both of these, all right? It's not just one-sided. China consumes all of these commodities like crazy, and they are exporting to other countries. But what if those other countries are in a recession? Maybe they don't need as much. Maybe they're getting domestic production for certain things now. Maybe they're using new partners to do that. Suddenly, China doesn't need to export as much. So we see these being stockpiled and so on. Understand, don't just look at a statistic and think, oh, that's China's fault because they haven't exported as much, for example. Well, what about the people that they're trading to? Or are they producing too much of that particular commodity or item or service, whatever it is? We always need to look into it deeper, and that's really what I try to do here, not just, read articles and look at charts. I want to know what's going on at least one level deeper than what we are seeing. I hope you do realize that. Losses resume. Chinese stocks fall again after rallying on the last day of June. I would say right here that we've had this peak and we can see that it has pretty much come down consistently over the past few months. This has been the case for world stocks in general. Even when you include the US stocks, the global stock markets don't really look that healthy since this point in time. We've seen them trading within this range here, and it doesn't seem to be surpassing its previous highs. Basically, wherever you look around the world, look at what has happened with China's currency. I'm going to show you a few charts, in fact, so we could see a severe devaluation that occurred, bringing it past that 6.7 mark. Okay, remember I've been addressing that over the past few days. You could see here in another chart, looking back towards 2015. Okay, then we see this. As soon as they had the summit that took place, immediately following that, you had this devaluation. Okay, every day practically it was just devaluing. They say they won't intervene, and immediately it rises back beyond that 6.7 mark. All right? And then I want to note a few things. China, to keep the yuan stable at equilibrium level, that's according to the PBOC's governor. And then right away we see it rising. China won't use the yuan as a tool in the trade conflict, according to the PBOC yet again, pushing it even higher. This seems like they're going to try and maintain that level of the 6.7 around there, let it float up and down a bit, but try to keep it within that range. Of course, I will be tracking that here. Here's just another chart. All right. Chinese banks seen selling dollars after yuan weakens past that key level. And you could see that this level also suspected intervention taking place now, but back in 2016 as well. They saw it sort of coming around there, and they can manipulate this in any which way they desire. It's very easy to do so. The central banks can simply just adjust what their currency is worth by printing more money, drying up the liquidity, whatever they want to do. Ultimately, it's in their hands. Now, this goes back and forth because other currencies may be affected as a result. We could have the US start to intervene in their market, which of course they do, and then we could have Europe doing the same thing with the ECB. We could have other central banks all doing it, and they do in a race to the bottom. All currencies are depreciating against real goods. We know that. It's very clear. No matter what country you are in, you can ask your grandparents' generation what they paid for a simple item, let's say a loaf of bread or some milk or something, eggs, and you will find, I assure you, they were paying a lot less for it back then. All right. Steep declines. PBOC moves to verbally support the yuan. Well, I think it's more than verbal. After the currency's rapid descent. Again, another chart that's coming out of Bloomberg. Chinese central bankers vowed to keep their nation's currency stable and to not deploy it as a weapon in the trade conflict with the US, helping the yuan reverse some of its recent plunge. All right, so they say they're going to support it, but they say they're not going to intervene. Alrighty. People's Bank of China's governor said that China will keep the yuan exchange rate basically stable at reasonable and a balanced level. All right. What could they possibly do? Well, they're going to say and make statements, forward guidance, the Federal Reserve likes to call it. A repetition of standard language that helps stoke speculation that policymakers are prepared to take tough actions to arrest the plunge in the currency. They want it to be devalued. That's a fact. If you want your exports to be strong, you need a weak currency. That's ultimately the way it works. All right. According to the central bank's Financial Research Institute, the head of that, apparently, the currency's decline isn't the result of China's deliberately weakening it to gain an advantage over the US. Okay, right here. Recently, the yuan's exchange rate has shown some weakness. This is entirely due to changes in the market expectations as external uncertainties rise rather than intended guidance, forward guidance, of the central bank. Or this could mean directly intervening in the market. China upholds multilateralism, globalization, free trade, and rule-based international guidance and will not make the yuan's exchange rate a tool to cope with trade conflicts. That's really what I think is going on here. I don't know how they're going to be able to manipulate it just verbally. I think they have been engaging in this policy for quite a long time. It is what all countries do, though. If you just say, oh, you're a currency manipulator, well, really, you're not addressing the way that central banks work. Central banks are constantly, every single day, they are in the market manipulating it. It's an absolute fact. That's what they do. They maintain interest rates. In order to maintain those interest rates, how do you think it happens? You think they just program 1%, 2% into the computer? No, they have to do what the Federal Reserve calls open market operations, and that is literally printing money or drying it up when they want to change that policy. You look at the central banks around the world, and there is one very, very specific policy, and that is to devalue the currency over time. It doesn't matter where you look. There are some countries which have destroyed their currency. You can see right now, Venezuela completely destroyed. It's quite sad. You look at Argentina following along with that. You can actually see there's a whole list. I'm going to try to do a video about it. Just look just recently, okay? What we have seen. Venezuela, number 1, okay? Argentina, covered that on the channel. Brazil, covered that on the channel. Turkey, covered that on the channel. Looking around the world, we see more and more and more countries that have devalued their currency, either because they are in some dire straits at this time, or they're doing it because, hey, let's just join the club. They're all doing it, and I hope I made myself clear. The central bank is the problem. If you want to know the real solution to the problem, it's get rid of the central banks. Now, is that ever going to happen? Of course not. Of course not. So what we do is we maintain a policy for ourselves. They always have these policies out there, governments, so-called officials out there. They've got it all sorted out. But as far as I'm concerned, what I'd like to do is keep my savings not in cash. I want to keep my savings in real assets. I want to pay down my debt because I don't want to fund and fuel this banker system. And I want to pay it down, and then I want to be able to invest in real assets, particularly those that provide a monthly income. Not a quarterly income, but a monthly income, okay? That's all for this video. If you found it informative, please give me a thumbs up. When you give me a thumbs up, it helps to support this channel very much. So I do appreciate that. Thank you. And if you want the financial education that was not taught to you in school intentionally, you need these 2 books. They've got it all. I took all of the information that I've gathered over the years, several years, reading tons of books, talking with the people inside and outside of the industry, trying to get an insight into what's really going on. And I'll tell you, they're not aware. Now, I took all the information, squeezed it in to these 2 books, and if you read it, I assure you, you're going to have a handle on what's going on in the financial system, a handle on your money. And if you take your investments to a financial advisor, you're going to be able to ask the right questions. So check them out at Amazon. Link is in the description below. If you're more interested in the audiobook version, you can get that at themoneyGPS.com.